You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. If I sound a little bit different, because I'm not coming to you from our studio in Chicago today, but no, down the street at an interesting event where I'm joined by a very interesting guest. I'm pleased to welcome Hester Peirce. She is the SEC Commissioner. Hester, welcome to the program.
Mark, it's great to be here. I need to start out by giving my disclaimer, which is that my views do not represent my own, but I mean, they do represent my own, but not necessarily those of my fellow commissioners or the commission.
It's just the two of us talking in the back of a very open restaurant, that's all. But I have to start, Commissioner. I love it whenever I see the markets responding to the regulator in an interesting way, and you've certainly, I think, been embraced, I think it's fair to say, by the crypto community with the, I love the sobriquet of the crypto mom. How do you feel about that? Is that something you've embraced, or are you not a fan of it?
No, absolutely. I mean, as I say, I'm not a promoter of any asset class or any asset, but I think there's a lot of interesting stuff happening in the crypto world, and I really am very impressed by the intelligence that I see, the entrepreneurial spirit, the desire to solve problems in a new way. I think it's a really exciting space, and so I'm honored to be called Crypto Mom.
The Crypto Mom. I bet you never thought when you came back to the SEC that you would become the Crypto Mom. Yet
I
here
certainly
we are.
did not. Yeah.
But let's get into that a little bit. Obviously, we're at a crypto-oriented event. We're adding more and more crypto-themed content to our network all the time, and we're being deluged by this question, so I thought I would put it out to you as well, which is what is going on with the ETF? Obviously, we hear many different iterations of that. We hear many people in the marketplace saying we need an ETF to really move forward. I know you've been somewhat outspoken on the fact that we don't have an ETF yet, so maybe let's start from your perspective and work back a little bit. We're obviously not there yet. What do you think it will take to really get us over that tipping point, to get some of your other commissioners who aren't crypto parents yet, to get them more familiar and friendly and approving of the space?
Well, I think there are a number of issues that my colleagues have laid out that they have concerns about. And, part of what I would like to do is to move them off those issues to some extent. So when, there's concern about the manipulation of the underlying market. And as with many markets, there can be messiness, there can be pieces of the market that don't work as well as other pieces. I think it is possible to build a product that trades in regulated markets on top of an imperfect underlying market. And so I think that that's one thing that people can help my colleagues see can work. There's an increasing knowledge at the SEC about crypto assets, so I think that that's all positive. As I've said in many contexts, I think we're not great on innovation, and we tend to be pretty conservative. And so I think reminding us that our role is not to be a merit regulator. I'm not here to say one product or one service provider is good or bad. That really isn't my role. My role is to say, if you can meet our regulatory requirements, if you can disclose to people what you're doing, how you're doing it, so that people have enough transparency into it. The market is really good at picking winners and losers. They're really good at disciplining people who are not doing things well. But we do have to make sure that the information is out there. So that's where I see our role as being. And I think if my colleagues can be convinced that, yes, some of these things will not succeed, but we're really just asking for the market to be the one that's able to test those.
And I've heard interesting discussions. A lot of people seem to fixate on the ETF. That seems to be the point where a lot of people have agreed that is what will be required to turn crypto into a quote-unquote real market. Call it what you will. That will be the catalyst that will make us move forward. And obviously that's not here yet, probably not coming anytime soon. Do you agree with that? Do you think we really need the ETF to get crypto to take its next forward steps here in the U.S.? Or do you think the market can grow and thrive in the absence of an ETF while we're kind of putting all this other regulatory framework together?
Yeah, I think the market's growing, and there are a lot of people who are engaged in the market, not waiting for any kind of institutional involvement. I think what an ETF would do is probably help institutional involvement. It would give investors a different way to access the asset class. But no, it's not necessary. And in fact, I think some people think it would be not a positive, because some people really like the fact that this market doesn't operate within the context of traditional securities markets, and so some people might not even want it to happen.
Yes, that certainly is the case. That's why I mentioned it's kind of a bit of a divisive point. Some others think we need to have to walk before you can run, right? So lay a little bit more framework before we can really get the highway going, to really just stretch that metaphor.
Well, I think that's part of it, but I think part of it is also just the feeling that, we're creating a decentralized space. And it's a decentralized marketplace. It operates with people all over the world, and so part of it is really saying we're turning away from traditional markets and we're looking at this space. Now, again, as you say, it's divisive. People feel differently about it, and I think there's space for both points of view.
We started really adding a lot more crypto programming to our network at the beginning of this year. We were a little late to the party. We wanted to watch. We wanted to wait for the market to evolve. We hoped someone would list some options along the way. Haven't really seen that yet, but we're still fingers crossed there. But I would say since the beginning of the year, the many, many dozens of different guests we've had on our crypto-themed programming, I would have to say conservatively 75, 80, maybe 90% of them have had products or venues or offerings that are primarily focused outside the U.S., because that's where so much of the growth is these days. Asia, Europe, Australia. We're seeing exchanges crop up everywhere. We're seeing, new products, new vendors, new venues, and so many of them are aiming at those markets simply because they can't really come to grips with the U.S. regulatory scene, or maybe vice versa. Maybe the U.S. regulatory scene hasn't come to grips with them yet. Does that concern you, that we're seeing so much growth, so much expansion overseas versus in the U.S.? And a lot of people are coming to us worried that maybe we're going to fall behind a little bit. Is that something that is of a concern to you as the crypto mother?
It's a concern to me whether or not I'm crypto mom. I think, as I mentioned, innovation has been something that we're a little bit slow on, and this is kind of a case study of that. And we tend to be conservative because we've got a long history of rules, and we've seen those rules operate, over time. And so we say, all right, well, it just takes a little while. And meanwhile, there's a lot going on offshore. And so I do worry. I want people who want to build things in the U.S. And I want to do what we need to do to enable them to do so in a way that's compliant with our rules. And that has been my frustration. It's been the frustration of a lot of people in the crypto world. they do want to build stuff here, but without regulatory clarity, they won't. If they're going to fear that they're going to get second guessed, they're not going to do it here. They're going to do it elsewhere. And I think there's a lot of really exciting thinking in this space, and this is where a lot of really smart people are applying their time and talents. And so, as with anything else where people are applying their time and talents, I'd like that to be done in a way that's going to make our economy more vibrant.
You mentioned innovation several times, and I know that's kind of been a bit of a theme of yours in your second tenure here at the SEC. Maybe we need to add Innovation Mom to Crypto Mom going forward. I know that's a driving theme of yours. But, the SEC, a large, somewhat, shall we say, bureaucratic regulator, not exactly known as the home of innovation in the space. How do we accomplish that? How do we make a regulator that can still handle all of its obligations of keeping the marketplace safe and making sure there are no adverse effects for the users, while at the same time being more innovation friendly, being more forward thinking? How do we accomplish that without some sort of major restructuring of the purpose of the agency itself?
Well, I think some other regulators have taken a look at themselves and really assessed themselves very objectively and said, look, we're not good on innovation. What can we do? Is there a way that we can open the doors a little bit more to it? So I think the SEC can do a better job being introspective about that. At the same time, I think part of it is expectations management, and part of it really does lie on the people who look at the SEC from the outside and say, well, you're not stopping every bad thing from happening to every investor in the marketplace. My response to that is, look, we believe that investors are adults. Investors can make their own decisions. Investors have the best information about their own lives, their own decisions, their own goals, their own what the limits of their own knowledge are. And so they need to be asking questions. They need to be admitting when they don't understand something. That's fine to admit, and maybe deciding not to invest in something if they don't understand it. They need to be seeking out information. They need to be exercising skepticism. And if something doesn't go right with one of their investments, they shouldn't be coming to the SEC and saying, all right, now I've lost money and I want you to make it better. And that happens a lot. And my reaction to that is, look, if we want to have an environment where markets can thrive on their, where products can live or die because of their own merits, then we're not there as an insurance agency. We're not there to cushion the blow when you make a mistake. We are there to go after people who are engaged in fraud, who are telling you when they're raising money from you, I'm going to spend this on building a great company, and they're actually spending it on buying a nice Lamborghini. That's what we're there to go after, but we do expect investors to do some work on their own.
I think that's a reasonable expectation. One of the other contentious issues on our crypto programming the last few months, some research came out a few months ago, I believe it was out of Bitwise, effectively saying that upwards of 95% of the volume that is widely trumpeted out there day to day in the crypto market is inflated, artificial, call it what you will, but it really called into question a lot of what we're seeing day to day in the marketplace. I'm curious, what are your thoughts on that research? Do you agree with it? And does that alarm you? If so, is that something you are looking to take proactive steps against going forward?
Well, I haven't gone back and second, tested the research to know whether or not it's accurate. I thought it was a really interesting contribution to the dialogue at the SEC, and I think one of the points that can be drawn from that is you don't have to have a perfectly functioning marketplace everywhere in order for markets to work, because I think the other piece of that research was to say there are places where this market is working really well and really efficiently. And arbitrage is really good at detecting trading that's out of line with other trading, and so you can bring markets into a healthier place with arbitrage. So my view is you can have markets that are imperfect and are still you can still draw something. You can still build a product on top of those markets, understanding that those markets are not perfect. It's not our job to regulate the spot market in Bitcoin. I don't think anyone is telling us it's our job. Now, if Congress gave us that job, that would be a whole different story. Of course, we would only have responsibility for it in the U.S., I presume. But it's not our job yet, and until Congress gives it to us as our job, I'm not going to take that on as my job.
Of course, The other side of that research is that it puts the rest of the marketplace in a little bit of a different light. One of the arguments against the ETFs that have been given so far is that they need to see more concrete volume in some of these other listed products like the futures. But if 95% of that volume is called into question, shall we say, then it does put some of these listed products that have been growing in volume quite a bit into maybe a little bit of a different light. Does that make you, I know futures not the purview of the SEC, but I'm very much curious, does that put your viewpoint maybe of those products in a little bit of a different light? Maybe do they hold much more resonance for you now when you're looking at approving an ETF, that there is maybe more value to that volume than maybe we thought before, when people were assuming there were billions of dollars changing hands that maybe aren't doing so?
Well, I think what it does is it makes it all the more interesting to me that people who are coming up with ETF ideas are thinking about different ways to build those ETFs. And so I think, again, I would say this is a time to kind of let people duke it out in the market to figure out which type of ETF, based on what underlying, is the most meaningful, the most workable. But again, I don't know that should be our decision to make.
I'm curious. One of the things our audience, obviously, options are in the name, so options are near and dear to us. And one of the things our audience was very excited about after the race to list futures at CME and CBOE at the end of 2017 was, okay, options are next. Clearly, options are next. They were taking wagers, metaphorically, of course, on when we would see those options listed. I was comparatively the Luddite. I thought Q2 of 2018. Everyone else thought early Q1. Here we are, over a year since then, and we haven't seen more, not only listed options, but we've seen the CBOE getting out of the listed futures game. I'm curious. I know a lot of our audience is surprised. Have you been as surprised as well that we haven't seen more entrants in that listed product space, whether it's on the future side, whether it's options on the futures or something else they're in, or does that really not surprise you given the fluidity of the regulatory environment we're in right now?
Yeah, I think that's a piece of it, the regulatory environment. I think a lot of people are trying to just sit back and figure out what the landscape is. They're trying to figure out what is going to succeed in this space and what isn't. And it's expensive to go into something new like this. And so people are cautious, I would imagine. And I think the regulatory expense is a piece of it. But there's also just the, trying to understand if there's a market for what what they're doing or what they might do. And so I guess I'm not surprised in the sense that I think, institutional markets can be cautious, and we probably want institutional markets to be cautious. I think that's not a bad thing.
One of the biggest areas of growth we see in the crypto space, I've lost track of how many people have come through our studios or how many business cards are on our desk right now that say they are crypto derivatives exchange X. That is the boom market, it seems like, in the crypto space. And it definitely seems like the definition of an exchange, and I'm using air quotes on an audio program, but an exchange in the crypto space is somewhat fluid. Everyone likes to call themselves an exchange because it sounds good. Quite frankly, it sounds a little bit more gravitas than broker. But what a lot of these quote-unquote exchanges are actually doing, they're acquiring customers, they're charging margin, they're charging commission. They're functioning effectively as retail brokers. I think in many other environments, that's what they would be called. Is this an area of interest or concern to the SEC, and maybe providing more of clarification? I wouldn't want to say a crackdown, but maybe more clarification on what it means to really be an exchange in the crypto market going forward, to maybe prevent a lot of consumer confusion at the end of the day between you're really a broker, but you're calling yourself an exchange. That gray area is becoming very crowded these days.
It is. I think it's a complicated area, figuring out what these trading venues are. As an exchange, is it an ATS, is it a broker-dealer? And there's a real need, I think, for us to provide more clarity in the space. But I think part of the problem is that it really goes back a bit further to figure out if what they're trading, if the digital assets they're trading are securities, because that then plays into whether it is an exchange and what the requirements are on it. But yeah, I think we are, just as we've brought a number of cases in the ICO space, we've brought one case related to a trading platform, and I think it's an area we're trying to figure out how our laws apply, and again, we should think about providing more guidance in the space so that people feel they can develop these platforms in a way that's compliant with our rules, and they have some guidelines about what that looks like. And I think there are a number of platforms that are interested in going through our process of getting approved to trade these things. But there are a lot of questions that still are out there and need to be answered.
Speaking of approval of trading products, one of the issues that is near and dear to the heart of our core audience, the options audience, they're very much active in the volatility space as well. And we saw a lot of interesting developments, shall we say, in that space over the last year, particularly in the VIX-ocalypse, volatility-mageddon, call it what you will, of last February 2018, where a lot of these esoteric volatility products like the inverse volatility ETPs effectively blew up. And we saw a lot of people trading those that probably at the end of the day didn't really know what they were trading or probably shouldn't have been in those. I've seen a lot of hand-wringing since then about what we could have done to prevent that going forward, because people are already asking us now, will there be more inverts of volatility and other products coming back? So it's probably only a matter of time before we see those again down the road. Probably not months, maybe years. Maybe you could speak to that as well. But I'm curious, do you think we as an industry maybe need to put a few more safeguards in place between people who come to, let's say, broker X and they see relatively plain vanilla ETPs like a SPY and other things that have been around forever, have a long track record, and then next to them they have something a little bit more exotic, let's say, like an XIV or an SVXY, or these inverse types of products, and there really isn't a clear demarcation of risk between the two. I've heard people say, obviously in the option space, you need approval to trade different things. They have level 1, level 2, level 3. Maybe is it time for something similar in the ETP space where here's, let's say, for lack of a better term, a plain vanilla ETP like a SPY. This is fairly basic. And then there's level 2, level 3. You at least need to click through a few EULAs to know that you're getting into a little bit deeper waters here before your proverbial grandmother from Iowa goes buys those types of products. Do you think that's an area we need to explore going forward?
Well, the proverbial grandmother from Iowa might be a very sophisticated person, and so I hesitate in this space and others. I hesitate to tell people they can't invest in things. I do think it's important for people to know what they're getting into, and I think this ties back to what I said earlier. You need to be comfortable with what you're buying and selling. As an investor, it's incumbent upon you. You don't have to understand how everything works, just as you don't have to understand how your car works, but you should be doing some basic question asking. And there is disclosure around these products, and some of it is quite clear that these products are intended for one purpose and not another, and so people need to take that seriously. And I think the financial professionals who are working with them also need to take it seriously, thinking, they have obligations to figure out what's right for their clients, and they need to meet those obligations. But I think we're really better off addressing the problem through that and saying, the products can be out there, but there has to be sufficient disclosure around them, and the people who are selling them should be asking the right questions to make sure they're appropriate. But I wouldn't do an outright prohibition. People have mentioned what you're talking about, maybe make it a bit harder for people to buy these products. Are you sure you really want to do this? Are you really sure you want to do this? That's fine. Some firms might decide they want to put that kind of a thing in place. But again, I don't like to just outright say to people, we don't think this product meets your risk profile, because I don't know. I mean, I don't know your grandmother in Iowa, and I don't know what she might want or need. And, maybe she just has some money and she's playing around and taking a bit of her money and playing around with it and deciding she wants to invest in a particular product or not. And I just can't be the one to second guess that. But I can be the one to make sure she gets the information she needs to go into that with her eyes wide open.
So the onus should be on the broker-dealer and on the advisor level rather than on the
Well, it is on the regulatory side to make sure that the disclosure is good. We do have a role in making sure that the disclosure is presenting clearly that there are risks, what those risks are, and so that is something that we need to look at. But again, a lot of the disclosure around these products is pretty blunt.
I'd be remiss if I didn't ask you before we wrap up. I know a lot of our audience asks us all the time because they were big fans of these products, despite their, shall we say, hiccups over the last year, which were the inverse volatility products. Do you think there is any appetite at the Commission to explore those again in the near future, or is that just dead money for the foreseeable future? Maybe crypto will come first before we see some of these inverse products coming back again.
Yeah, I mean, I'm not going to speculate about when something might or might not come to market, but I think there's people my colleagues at the Commission, the staff at the Commission, pay attention when there's an event like this. They look at it, I look at it, but as I said, we have to remind ourselves periodically we're not a merit regulator. We can't prevent all bad things from happening. Markets go through changes, and people need to be reminded. And I think one of the important functions that we do play is reminding people you have to think about things not only in terms of what things look like today, but in terms of what things might look like in a month or 2 months or a year. And it might be very different from what it looks like today. So when you're making your assessments, think about your whole portfolio, think about your long-term needs, think about the fact that things change, correlations change, markets change. A product that might be doing great for you one day may be doing not so well for you in the future. And so I think it's really more our role to make sure the disclosure is good and make sure that we're reminding people time and again to think carefully about products. But I'm pretty free market on these things. Other people would have our regulator, our agency, be a little bit more active in saying no, slow walking certain things. But that's the beauty of a commission, is that you get a whole range of people. I'm one of 5 commissioners, and we all work together and learn from each other and take different approaches to how regulation should work.
Well, Commissioner, I appreciate you taking some time to clarify these issues for our audience, and we'll look forward to seeing how the crypto and other initiatives, how they unfold in the marketplace in the coming months.
Thanks for having me, Mark.
Thank you.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.